Hello, investors. Welcome to the Census 360 Investor channel, where we make use of best practices from around the world and the companies that we invest in, apply that to the investing process, framework, methodology. Okay, so this video is going to focus in on the markets, a segment within our 360 view of investing. And the topics are, we'll take a look at the S&P 500 as a proxy for the markets, treasuries, sentiments, see if there's any notable earnings for the week, the economic calendar, and finish up with one stock you may want to look at as just as a study or passing interest. Okay, before we begin, a quick word about the disclaimer. This channel is not providing financial advice. Please pause, read, and then continue. Okay, so without much further ado, let's begin the show. And we'll start off with the economic calendar because this sets the framework for later discussion. So we've been through the big news headlines last week with the Fed meeting, and we all know what happened there. This week, there's a couple of useful economic reports: housing starts and permits, and then existing home sales. Since housing is a large piece of the consumer puzzle, it's always worth paying attention to those reports. All right, so moving on to the S&P 500s and look at the different views. So this is the daily, and in terms of kind of a drill down in the activities, if we look at the upside first, over the past 25 days, there's been 2 days of notable accumulation, and over the past 5 days, there's been one. And on the flip side, on the sell side, of the past 25 days, there's been 5 days of notable selling, and 2 of those have come in the past 5 days. This has actually weakened from last week, and the selling side has now picked up again from last week's support. And the index has itself fallen below the 50-day moving average. It was above it in the prior report. And then if we look at just up days and heavier volume versus down days and heavier volume, picture of the past 25 days gives us 4 up days and heavy volume, 5 days down on heavy volume. So the selling is slightly overtaken the buying here, and we can see that in the pullback. Okay, so if we go back to our long view, so I've shortened the view just to give clarity to the chart a little bit. So we can see obviously there's the uptrend, COVID lows, and here is our current downtrend. So we try to, here's a classic bear market rally, but fails our resistance and go to retest the June lows, set the October lows, another bear market rally, and again we failed that resistance, and the resistance is now downtrending. So it looks like we're now going to come back and at least make another retest around 3,600. There is support above this, so this it's not a given that we'll get down to that level. So we could find support between that and the 38 and try and make another little beeline up. If we can get a Santa Claus rally, that's what needs to happen. Otherwise, we're going to sell off, and we'll be looking at these zones again. And just a reminder that these are the markers that have been here, from day one, in terms of where we think this market will eventually, or could I end up before we get a meaningful turn the upside. And then let's go from the weekly to the dailies just to get clarity on the chart. So we can see here's the most recent rally, straight up to resistance, little head fake up here, and then gets sold off down to support. Again, makes a beeline up, but not to the prior levels. And then we get a sell off here, and now we've gone cut through the support, and we've cut through the support zone here as well. So it's kind of in free fall, and there's a couple of areas down here that it may get, a dead cat bounce from. So we'll have to see. And here's the hourly chart. So here's the Fed speech or interview from a week or so ago, and you can see the moonshot. It was literally just their pockets all the way up on the hourly chart, and then we have all that got sold off. And we find out we're moving up, big gap up here, and that's now got sold off. So it's it creates this big gap which has been closed. Got a little gap here, and we'll see if we can if this can mount a little did come bounces soon. Okay, moving on to the treasuries. And so if we look at the 10-year yield, we can see, it's been kind of slowly working back its way down, but now it's going down to levels where it's trying to stabilize and maybe just like it did over here, come into some kind of support zones and move back up here, came back in, move back, came back in, move up, came back in, move up, came back in, move up. And the TLT on the other side, we noted the capitulation selling moves down here, which is an opportunity to play this to the upside. So it's moved up, find a little resistance over here. And now it's starting to come back in a bit. So there's a couple of support zones down here. We'll see how this fares. And then just in the risk on, risk off process, we can see the junk bonds are still capped, enslaved in this downtrend, trying to make it move there. Looks like it's facing some level of resistance. So this may work its way down again. And then just in terms of fundamentals with S&P earnings yields at 4.99, that's moved up or down because the price drop. 10-year treasuries moved down a bit from the 4s down to 3.48. But notably, the 2-year treasury is still above 4. The 3-month, I looked at 3 months as well, it's 4.2. So you can see the near end of the curve is very steep and it drops as you go out to the far. So we have a very pronounced inverted yield curve. And then here we have a little divergence again, so yields were coming down on the 10-year, but prices arrested and hit resistance and started to move off. The dollar's been coming back in. That should have helped some of the larger companies with their foreign exchange currency balancing. And then we have the 30-year also moving down a little bit. So as this yield moved in, you would have expected the S&P to continue moving up. And then just take a look at the put call ratio. This is sentiment indicator, usually contrary. What's notable here is that if you look at after November, look at the spike, trough. It's gone very volatile up here. And you compare this with earlier over here. So it's a lot more sedate through here. Starts to get a little bit more extreme up here, but nothing like what we have here. So this is very wild. And then if we look at the fear factor VIX index itself, I've noted out the times that it hit the 20s and it got up here in 35 zone. So we had this pullback in undercut of 20, and it's moved up since then. A little stabilization here. And so as this is starting to move up, so I wouldn't be surprised if this finds its way back up into the 30s as this market comes in. And we've already seen the uptick in put buying. Then if we look at another sentiment indicator for the AII, they have been very bearish pretty much all year. And so at historic levels, the averages of these, and you can see how the bullish nature's been way under and the bearish nature's been way over. And these have persisted for a long time. And then we got a little gauge up here, which is contrary. So over here, you want to be, as this comes in, you want to be, taking stuff off the table. Over here, you want to be adding to your exposure. So it's right on the cusp now where maybe locking in some profits is the game in town. Earnings watch, there's only one stock that looked off interest, and that's General Mills. Consensus earnings estimates 106. Reports on the 20th. Prediction is to come in line. So no big misses or beats expected there. And then one stock idea for the week. There's a few to choose from. I ended up putting Matador up as an option, still within the energy sector. And we've got other energy sectors. So our FANG has now gone 4 weeks. It dropped from when we put it in. One of the dangers of putting these up here as they show strength is then they're prone to pullbacks in this market. So the 4-week numbers will, in some of these, end up showing negative. And so ideally we want to measure them over 13 weeks. But I just want to kind of just as a table, just go out 4 weeks with these. So RJ Reynolds dropped off. I'm running Metro, and then next week Fang will drop off, and we'll see how McKesson did. And so that's the stock of the week. Okay, so that is our market update. If you haven't already done so, if I can ask you to subscribe, if you like to give it a thumbs up, share with your family, friends, if you're inclined to leave a comment. And so that was the update for December 18, 2022. Thanks for watching. Thanks for listening. I will see you in the next video. Goodbye.